Hey folks, Chris Versace. We're back with another What Does It Mean podcast. Joining me, as always, Lindsey Bell. Lindsey, what's kicking? Real quick, chicken, what's kicking?
Well, we're getting into the end of the year, so I think I'm eagerly planning for the holidays and travel and all that fun stuff. So what about you?
Pretty much the same, but I got to tell you, Lindsey, I was very excited getting ready for our conversation today, talking about crypto, AI adoption, and I think we're going to set the world straight on some of these ridiculous S&P 500 forecasts for 2025. What do you say? You ready to do it?
I'm ready to do it. I think those are really very timely topics, and we're going to have fun talking about it.
All right, let's go. We'll be back right after the break.
Welcome back, everybody. We are going to dive right in, Chris. Let's talk about crypto. Let's kick this conversation today off with crypto because why? It's really caught my attention, but it's also caught everybody else's attention because it's moved from 70,000 pre-election. It's crossed over 100,000. And we've got the Fed Chair Jerome Powell and the U.S. Treasury calling it digital gold. It's in ETF products now. Big financial institutions like BlackRock are backing it through ETFs. It's gaining in credibility. So, Chris, this begs the question, is it time for advisors or retail investors to consider it as part of their portfolio?
Well, I think there's two parts to that, Lindsey. Consider, of course, they should always consider it, right? The question is, should they pull the trigger and actually start putting it into portfolios? I understand that there's some, what's the word I'm looking for? Acceptance that's really coming on as a result of the 2024 presidential election, the naming of the next likely SEC chair who's a little crypto friendly. But, Lindsey, these things are still pretty volatile. And at one point, there were so many cryptocurrencies out there, even with like religious related currencies and all these other things, that my suggestion to advisors is if you're looking to go into the road of cryptocurrencies, do it with an ETF. You'll be a little more diversified. You'll get into something that can trade. It's liquid rather than doing some type of arcane little followed cryptocurrency. And to be clear, Lindsey, I'm not the expert on crypto. Thematics, yes. Fundamentals, maybe. Crypto, afraid not, my friends.
Well, I think that's the exact point, Chris, is that there's not many of us experts on crypto. I certainly am not one either, but it is something that the financial services community has obviously had to kind of get educated on and learn. And I think we're still in the process of learning that. It's still a speculative asset class that not a lot of us understand with deep knowledge. Like I said at the beginning, it's gaining in credibility as these bigger financial institutions start to kind of dive in. The SEC did approve, even under Gensler, who is not necessarily a crypto-friendly guy. He did approve the launch of these ETFs. So I think it's something, agreed. I agree with you. I think it's something to consider, but I think you have to be mindful of what are the risks. The risks are there's a significant amount of volatility in this asset class, right? All you have to do is look at the long-term chart, which is also why it lacks actual utility. You can't exactly use Bitcoin to buy things because the price of it is...
I mean, to some extent you can. You can't roll into Starbucks and say, hey, give me a double tall skim latte and here's my Bitcoin. But we are seeing some progress on that. There are apps out there like PayPal that you can take dollars and put it into crypto, that sort of thing. But I agree with you. The utility in terms of a cash equivalent, it isn't there yet. So there's got to be still some speculative aspect to this as to why folks want to own it. I do agree with you, though, that other than tracking the price of Bitcoin, like as a fundamental guy, there's no monthly data that I can follow. You know what I mean? Or third-party data. So it's kind of hard for me to wrap my hands around it. But if we were to say, if every portfolio should own some gold, I think the question, Lindsey, is, should the digital portfolio of the future contain some digital gold?
Yeah, and I think the answer to that is, and maybe this is what does it mean for investing in crypto, which is the topic we're talking about here, is that advisors should continue to see it as a speculative asset and as such should treat it that way. And I think that's how most advisors do. And so it can be a small portion of someone's portfolio with the caveat that it is a volatile asset class. it maybe goes into your mad money investment bucket within your whole portfolio. And I don't think it gets above 5%. You start at 1% as it grows. You kind of got to be mindful of watching it and paring it down. What do you think, Chris?
I agree with you, Lindsay. I wouldn't even say 5%. I mean, if 5% of your portfolio can be a large percentage depending on how active an investor you are. I would say maybe half that, or maybe do something crazy, Lindsay, and pair it with gold and have it be a total position of maybe 3%. Have some in there. Maybe you catch the upside, but it's enough such that if it falls out of bed, it's not going to wreck your returns.
So it's worth considering at the end of the day to be part of a portfolio.
I think that is, what does it mean? It's worth considering. Do your homework, be smart, maybe flirt with a little bit, but by all means, folks, don't go all chips in.
Let's dive into the next topic, AI adoption. I mean, you've been on top of this, Chris, I have to say.
Well, I appreciate that, Lindsay. I've been doing a lot of reading on it over at the Street Pro portfolio. We're clearly benefiting from AI adoption. But the point I want to make to folks is that it's a mistake to think that there's only 1, 2, maybe even 3 companies that are really going to benefit from this. Remember, we're still in the somewhat early innings. So yes, folks are going to talk about NVIDIA. They're going to talk about Microsoft. They're going to talk about OpenAI. But being students of the market, watching history and new disruptive forces come together, we can say pretty comfortably, I think, Lindsay, that we are starting to see a bit of a widening out, right? We have seen the very first inning, the infrastructure is being built, chips are being sold, data centers are getting upgraded. Now, coming off the September quarter earnings season, we're hearing about greater adoption, whether it's Microsoft, ServiceNow, even last night, Oracle is talking about the huge ramp in their AI business. We're entering, let's call it the second, the third inning. Software services are starting to be adopted by enterprise. Today, as we're taping this, Apple's iOS 18.2 comes out with the big update for Apple Intelligence. So we'll start to see AI adoption in the smartphone. As I look at this, we're entering this cycle, Lindsay, right? Where we're going to see AI adoption, and then it's going to jam capacity in the digital infrastructure. And we're going to start seeing more spending on it. So we're going to see this virtuous wheel that gets me real excited, because it's not just PCs and smartphones, right? It's a whole host of new adoptive areas for AI. And here's the thing, Lindsay, in about a month, you know what happens in about a month? Any guesses, Lindsay?
In a month, the year ends. What happens? The inauguration.
You're like right in between. It's CES 2025, the old Consumer Electronics Show. And for guys who watch technology and technology adoption, this is gold, because we're going to see a plethora of new products get announced that'll be hitting shelves later in the year. So one of the things that I'll be paying very close attention to is new AI capabilities in laptops, PCs, tablets, and embedded in other devices. And I think this is going to be a bonanza for AI.
Well, I did notice that Evercore recently put out a research report, and they said that about 10% of large companies are using AI now, which is up from 5% earlier this year. And they're expecting that to be 25% at the end of next year. And so you and I both look at earnings pretty closely. And I think the Magnificent Seven, a lot of the stocks that you talked about, have gotten a lot of slack over the last year plus because of the amount of CapEx they're spending to address AI needs and build out and things like that. Because at first everybody was gung-ho, spend the money. And now all of a sudden investors are getting religion and want to see the ROI on that, right? I just think that as this spreads out, this hasn't been reflected. People give slack for the amount of 13, 14% earnings growth that's expected in 2025. This isn't your broadening out of AI into other companies. I don't even think is in those numbers.
I totally agree. And to that point, Lindsay, the government, I mean, you can't always trust the government, right? The data, you got to be aware of it. But There was a report that came out from the National Bureau of Economic Research, and it's titled The Rapid Adoption of Generative AI. And what I found fascinating with this is it said that in August of 2024, so a couple months ago, roughly 39% of the US population age 18 to 64 used generative AI. More than 24% of workers used it at least once in the week. Nearly 1 in 9 use it every work day. That sounds like a lot of adoption, Lindsay.
That does sound like a lot of adoption, but I think too that report, because you shared it with me, it the specific industries and job functions that are using it, because I know plenty of people in my own family or my friends that are like, well, I don't even, it came up at Thanksgiving, right? So people are like, yeah, I've never tried to use AI. And I actually have one of my nieces goes to Clemson, and her boyfriend is an English major. And I said, are you guys using AI? Are they teaching you to use AI at Clemson? What's the story? And he said that they're teaching us to use it as a resource for research, but not, they told us we shouldn't be using it to like actually write for us. But I tell you one thing, you might do it different.
Well, you shouldn't have asked the English major that. You should have asked the math major if you're using it to write for you. That's probably the type of person that's doing it. But I know I know what you're getting at, Lindsay, because there was a chart, a two-pronged graph in the report, and it was like eye-opening to me because it showed it across various occupation groups from management, business, finance, education, even blue-collar jobs. But then there was an industry group perspective. And I don't think it'll surprise anybody that finance and info technology was way out in front in terms of AI usage. But you know what surprised me? Agriculture was the second largest one. And I think if you look at that and even scan down about how AI is being used in manufacturing, construction, even leisure, which I was surprised to really see the adoption in the double digits there, it just tells you that we are seeing that adoption unfold. And I think that while folks are kind of skeptical and you might ask around, oh, are you using ChatGPT? Have you tried Perplexity or Claude? The reality is that while we might survey our immediate group of people, the larger data says, yes, this is happening.
What does this mean, Chris? Does this mean that the AI revolution is investable? And if so, where do you invest? Is it in those areas you just mentioned?
I think there's a number of areas that you can invest in, Lindsay. And yes, it absolutely says that it's real. I won't jump up and down like some folks on CNBC wearing a pink jacket and multicolored shoes, but I will say that having seen this in the past, whether it's internet adoption or PC adoption, and by the way, this NBER report says that AI adoption is proceeding at a pace that is far outdistancing PC or internet adoption. I think we got something here. So as an investor, you do want to be exposed to this. As far as how to do it, I think there's going to be first, second, third derivative plays. Obviously, the first derivative where we are today, yeah, you want to be owning NVIDIA, you want to be owning Marvell, and I say that because we own them in the Street Pro portfolio, but you got to start looking for software and service plays. Some folks will go with Microsoft, Oracle. We actually own ServiceNow in the Street Pro portfolio, but there are others out there. And I think the next iteration is going to be consumer-related services and hardware, not just enterprise. And when it hits that, look out.
I agree. I do think that this is moving a lot faster than it's getting credit for. So that was good info, Chris. Thanks for sharing.
Lindsay, you were asking me earlier this week about S&P 500 2025 forecasts. Why were you doing that?
Well, as we come to the end of 2024, we've got everybody releasing their 2025 outlooks, right? So all the big banks, all the broker dealers, the brokerage houses, research analysts, everybody. And as we've talked about in the past, they're famous for releasing their S&P 500 price target. And I've been seeing this 7,000 number out there, which is about 15% or so higher than where we're at today, which would be a really great year, especially after 20% plus years. And so I was just kind of curious where people were landing. And that's, the 7,000. I think Oppenheimer, you said, is at 7,100. over the top end of the range, but there's folks in the 65, 6,700 range, which to me actually seems like a more reasonable price target, just given the percentage growth and what you're seeing in earnings. But the point is, Chris, is everybody is super optimistic going into 2025. This is the opposite of what we saw last year. Am I right?
100%. And when I see that, I get a little nervous because it's so expected. I start to think like, what happens if it doesn't unfold that way? And I think you have to be mindful that sometimes strategists have a little bit of an agenda. You need to understand their assumptions, whether it's valuation multiples, earnings growth, or where the sectors are playing out. Because I just remember this time last year, Lindsay, whether it was JP Morgan or Wells Fargo, some of these guys, their 2024 year-end targets for the S&P 500, man, oh man, were they way off, right? JP Morgan was at 4,200, Wells Fargo, 4,625, Jefferies, 4,700, even the highest, Goldman Sachs, 5,100. Lindsay, how right were these people?
Hey, listen, I used to have to make these numbers up, and you do your best, but it's hard. It's hard to predict. I always say this about making price targets for the S&P 500. It's like predicting the weather exactly on December 31st, 2025, right?
Yeah.
How good at that are you going to be? Like, I mean, we could get a heat wave. You could be in New York, upstate New York, and get a heat wave on December 31st. You just never know. I think it's difficult, but they're trying to do the best to show you the direction that the market should go in. And I share the optimism, but that doesn't mean I necessarily think it's going to be a straight line. There's probably going to be bumps along the way, and that's actually super healthy to have. So, I mean, I'm pretty optimistic, and I think you are, though, too. What makes you optimistic about the year ahead?
I just think that we're going to get some greater clarity on taxes. We'll have a regulatory environment that's a little more friendly. If we take a look at some of the more recent economic data on the new order front, it looks like that the economy is going to start on very firm footing, January, February, and usually how we start the year tends to indicate the type of year we're going to have for the market. So I do look forward to that. I think I will say, however, that 14+% EPS growth, I'm going to need a little more convincing on that as we go throughout the year. Typically, it's very weighted towards the second half of the year. And as you pointed out, Lindsay, a lot can happen. And to me, this is a great reminder looking at these forecasts that these are, as you were kind of saying, a snapshot in time, right? It's a photograph, right? But as investors, what we need to keep in mind is it's more like a movie, right? A great drama, an evolving narrative. There are bumps, twists, as you said. Sometimes they can bring opportunities, and sometimes you got to know the old Kenny Rogers song, know when to hold them, know when to fold them. And with that in mind, you need to be an active investor, right? Because the vast majority of people don't go, I'm part of the S&P 500, see you later, right? Individuals like to buy stocks, and that means that there's no, I'm really going to mix my metaphors here, Lindsay. There's no crockpot investing, right? You can't fix it and forget it. You need to be active, which is why we invite folks to come back every week and really listen to what we are digging into.
You think about, too, no matter how optimistic you are, you look at the AAII sentiment survey, and we're back, above historical bullishness here. And so that can be like a sign that potentially we're at a nerve-wracking level. But also you look at oversold levels on the RSI, we're actually coming off of those. But the point of the matter is Chris, is that the market can stay bullish or optimistic or the opposite a lot longer than you can remain soft. That's the famous Warren Buffett line. But I think what you have to think about is, what are the risks? Like what I like to, okay, I might feel optimistic, but what are the risks that stand in my way? And as I think about the year ahead, or at least the next 6 months, like the single biggest risk in my mind is inflation, because we've been talking about it. I see it as being pretty sticky, and the CPI data, at least up until this point, has been going in the wrong direction. You and I talk about this all the time. which if inflation is sticky or reinflates, we start to see a little bit of growth there, you run the risk of the Fed changing direction of policy, which could be a major risk to the market. So, I mean, that I think is a low risk at this point too. But try to tick down some of my risks for the year ahead. What's on your list?
There's someone who I used to work with who said that part of being an investor is assessing potential outlooks and weighing them by their respective probabilities, right? So as you get more data, you can kind of rejigger those probabilities as needed. And in this case, I do think that even though the outlook is positive, we could see a little bit of a curveball by the Fed next week. I think that November CPI data, if it comes in as expected, Lindsey, it means that we're going to have a 3.3% core CPI figure for 4 months in a row. That is sticky. And if we get a 0.3% figure for the sequential core CPI, if you look at that over the last few months, it's pretty much been there. That means if you do the Fed's little hokey pokey magic trick 3-month moving average number and you annualize it, 3.6%, Lindsey, not good. So I think if we see that, I think the market kind of trades off. But as investors, right, folks, that when things pull back, if the fundamentals are intact, that is a potential opportunity to consider. It's not always bad news. So be prepared.
Absolutely. You got to be prepared. And I think what does all this market optimism mean? I think it means that it's a good thing. Momentum typically begets momentum, but also just a reminder to be realistic that the market doesn't always go up and to the right. And so consider the risks, consider what inflation is doing, what the Fed's doing, and then also what the consumer is doing, I think, in the year ahead, right?
I think you summed it up extremely well, Lindsey. I would say IBID is what I would say. In other words, exactly what you just said. Let's come back after the short break, Lindsey, and wrap this up.
Welcome back, everybody. Let's wrap this up, Chris. We talked a lot about some great topics today. What was the biggest takeaway for you between AI, crypto, and market optimism?
Well, I think it's the point that you made that sometimes the market kind of focuses on what it thinks is going on and misses what's happening right in the weeds. And I'm really referring to AI adoption here. There are folks that have been saying, oh, wow, look at these valuations. Oh, geez, can these stocks go higher? But I think when you sit back and you take a look at where we are in the adoption and the progress that we're seeing, particularly what we called out in that National Bureau of Economic Research report, that it is unfolding and it's even faster than other technology shifts that we've seen. But the point that you made that perhaps this is not really reflected properly in 2025 expectations, I think you're right on the money, Lindsey.
Well, thank you. Thank you very much. We'll see how it pans out. But I think my takeaway from today really was that there is opportunity inside the market, even though we've had such a run. There's always remains opportunity. You just have to be looking for whether it's in the secondary or tertiary beneficiaries of the AI revolution, or if it's in the crypto space, if that's something your clients are looking at or interested in. I think it's good to keep an open mind. And I think the market optimism together, I think that's just a good sign that we're going to end 2024 on a positive foot, as December typically does. So I think that's a wrap for this week, Chris. If you're listening now, check out the show notes and resources. You can find Chris over at the Street Pro Portfolio. You can find me on LinkedIn, and check back with us next week for the next episode of What Does It Mean? Thanks for listening. We'll see you soon.